Hey everyone, and welcome back to Everything Tesla stock. Following the recent 3-for-1 split on Tesla, many investors are pretty optimistic about the future performance of the stock. Although not at a seemingly perfect rate, Tesla's stock price has gone up the chart in the previous months. It's holding close at $300 per share at the time of this video. That's pretty impressive for a stock that sold for less than $5 back in 2011. However, although there are analysts who believe that Tesla is doing well in terms of stock valuation, there are also others like Gordon Johnson, who thinks otherwise. According to the stock analysis, Tesla may actually be worth only $22. But has Gordon Johnson said this for any particular reason about Tesla stock? Let's find out in this video. But before we get into it, if you like this type of content, don't forget to like and subscribe and turn on notifications to keep up to date on everything going on with Tesla. GLJ Research CEO and founder Gordon Johnson, in a recent interview with CNBC, revealed his opinion on how much Tesla stock is actually worth. The Wall Street analyst, who has been bearish on Tesla stock for the longest time, has stated that the EV company's stock is only worth $22. This is way below the current price of Tesla stock, even after that 3-for-1 split. Gordon Johnson is known for making very low price targets for Tesla stock and sees the stock as rather overvalued. The stock analysis had once described Tesla as a growing company that's barely growing while advising investors to sell their shares. And now he's shared some reasons as to why he believes that. And he's explained why Tesla stock is worth less than its current market price. But you better watch until the end though to get all the information. According to GLJ CEO, Tesla is losing significant shares in every one of its markets. Johnson stated that the car maker has lost roughly 10% of its market shares in the US and about 11 to 8% in China, both in the first and second quarter of the year. He also added that Tesla is facing a high cost of production, especially with its batteries, and may find it difficult to cut down cost. To further drive his claim, Johnson added that the company's capacity is above its demand, and Tesla is gradually losing its lead times significantly in countries like China. He believes that the EV maker's demand problem is caused by better market competition. According to Johnson, Tesla has lost its production edge. He believes that there are a number of competitors who have a similar or better real-world range and quality than Tesla, better interior, and similar or better charging speed. He further stated that according to Consumer Reports, Tesla ranks second to last in quality and has the least reliable car. Although this could be argued by several other stock analysts, Johnson is of the opinion that not everyone wants a Tesla, as most of these analysts claim. He also added that since Tesla has lost its production quality edge, it's only expected that deliveries are declining, which is a big problem for Tesla bulls and investors. However, although Johnson is a long-term analysis and his claims may seem to hold water, there are a few reasons as to why this statement should be given a second thought. Even though Johnson believes that Tesla has a demand problem, he still claims that the company is losing its market and may continue to do so owing to delays in its car production. He also claims that there could be a possible decrease in the price of Tesla's electric vehicles in the future. Judging by this statement, it could be said that Johnson still agrees that Tesla can potentially overcome its current market challenges, since a reduction in the price of Tesla's EV can be driven by a decrease in production cost, which is actually one of the EV company's goals. Likewise, the delayed delivery is only indicative that Tesla is producing more cars. Johnson stated in the interview that Tesla is barely producing cars at its Berlin and Texas plants. There are a few reasons to believe otherwise. The automaker has continuously made an effort to ramp up its production at its gigafactories globally. Its Shanghai factory recently crossed a 3 million car production milestone, despite being down for the better part of the first quarter. No doubt Tesla experienced a reduction in its production capacity, which caused a significant headwind for its delivery growth. However, the EV maker still managed to produce a significant number of cars in the first 2 quarters of the year. Tesla delivered 310,048 cars in the first quarter and 254,695 vehicles in the second quarter of 2022. Although some investors like Gordon Johnson have been cutting their prices and their expectations on the stock due to a 17.9% car delivery decline in the first and second quarters, some analysts remain bullish. Based on car production and delivery, it could be said that Tesla is making efforts to make things better. The company's CEO, Elon Musk, has recently given hints on Tesla's plan to build 10 to 12 new gigafactories. This is in a bid to meet Tesla's car production target of 20 million cars by 2030. Musk stated that the company is aiming for an output of 1.5 to 2 billion units per factory. This, if achieved, could see Tesla sufficiently meet its car demands, and investors are likely to make enormous profits from its shares. As stated earlier, although there are investors like Johnson who are bearish on Tesla stock, there are some who believe that the automaker is doing way beyond its competitors. Gene Munster, managing partner at Loop Funds, gave a contrasting view to that of Johnson in the same interview. According to the analysis, he sees Tesla as a company that's going to have higher growth rates and a massive addressable market. He added that Tesla may get to the point where they can go from $70 billion to $400 billion in revenue in the next 5 years. Munster added that Tesla has got the potential for remarkable growth because the EV company not only makes cars, but also makes solar, and is planning to go into heating, ventilation, air conditioning, HVAC, and he believes that no other car company is doing this. Likewise, Wedbush analyst Dan Ives recently revealed that demand is not the problem for Tesla, it's rather supply, and the company is doing all it can to curtail this. Ives said that Tesla's supply has been and is now on an upward trajectory. The company also has increased production at its Berlin and Austin factories, and China is on its next level of Model Y production. He added that Tesla can make 2 million car deliveries in 2023, and if that happens, the EV maker is going to have a big advantage over its other competitors. Obviously, these are predictions that Gordon Johnson will likely not agree with, since the stock analysis has continuously doubted Tesla's capacity to meet up with its demands. The analysis stated at a time in 2020 that Tesla was going to experience a drop in the volume of cars sold in the fourth quarter of that year. Likewise, he doubted Tesla's car delivery to rental car giant Hertz. The car company has ordered 100,000 Model 3 cars to add to its rental fleet, and most analysis and Tesla bears doubted that the delivery could actually be made. But Johnson soon after confirmed Tesla's credibility after Hertz revealed that the Model 3 deliveries for its Uber fleet were happening. The Wall Street analysis also claimed that Tesla's new batteries from Panasonic were similar to laptop batteries and were thus not ideal for EVs. Japanese battery company Panasonic revealed that it would increase lithium-ion battery cell production for Tesla to about 10% by 2024, through improved efficiency and reliability of production times. Although Tesla bears argue that this amount will barely be noticeable considering how quickly the EV battery business expands, it is a positive step towards solving Tesla's battery problem. Also, even though Johnson claimed that Tesla's got no prototypes for its Model 3 or Y, these EVs outperformed market expectations. The Model 3 and Model Y turned out to be the world's best-selling vehicles by trading volume and revenue respectively. Since there is increasing competition in the EV market, it's only expected that there is more scrutiny of Tesla's production and delivery dates, as well as of its vehicles. Although Gordon Johnson could have valid reasons as to why Tesla may be overvalued and why investors may need to sell their shares, Tesla stock still has a positive growth potential. While Johnson has advised Tesla investors to sell their shares in 2013, owing to Tesla's challenge in procuring batteries, the stock has risen more than 2,000% since that time, so investors who sold their shares at the time would have made a massive loss. This is not to say that Tesla's stock price will continue in the positives. Like every other stock, it is usually a mix of upward and downward trends, and since there are so many of Tesla's targets that were not met, it may spell trouble for Tesla investors if the automaker fails to increase its car production and delivery as well as secure its place as a leading EV company. What do you think about Gordon Johnson's valuation on Tesla stock? Can the EV maker's stock really be worth $22? Let us know in the comments down below, and while you're still here, go ahead and click on one of these two videos on your screen. See you there!